And we're live in 3, 2, 1. Let's go time. Welcome to G Money Real Talk on everything mortgages and real estate. Today I'm here with a couple of my friends and colleagues, Sarah and Cody. And we're going to talk about finances. We're going to get real deep on it, as deep as we feel like it in anyways. And Sarah and Cody, thank you for joining me.
Thanks for having us.
Thank you for having us. We're happy to be here.
Awesome. Well, it's the new year. How you guys feeling?
I'm ready for it.
You got
too.
it?
I love I'm a person who loves like seasons and new beginnings and changes.
Yes.
And I feel like it's just one more opportunity to analyze like what happened this year. What do I want to do the next year? Let's set some goals and get moving.
Yeah.
I love the new year.
I've definitely been working on my goals, and 24 was a mediocre year. Mediocre, I'm going to be honest. In my real estate world, it wasn't astounding. Part of that, though, I feel very accomplished with things that I did. Again, for slower business, lack of business, I really went after it, so I feel very proud there. 25, I'm ready. It's go time. Let's make it a better year. That's what I'm going after.
That's great.
Yes. So I've got my friends here. I do mortgages, as everybody knows, and mortgages are overseen by, I can't tell you how many entities, Department of Real Estate, the National Mortgage Licensing, Department of Corporations, FINRA, FinCEN, whoever does oversee us, and there's a ton of compliance. And with my fellow finance advisors here, there's additional compliance. So I feel their pain. With that, they've just asked me, they've consulted with their company that we're not going to release their name. We're not going to heavily advertise it. At the end, we'll definitely provide you with contact information, but that's our font size 10 disclosure. shall we call it? Is that a good way to say that?
Yeah, I like it.
That's perfect.
Yeah. So without further ado, what I'm going to kind of just kick it off with is I'm going to introduce Sarah. She's sitting right next to me. Let her introduce herself and tell us a little bit about yourself, Sarah.
All right. Well, Greg, thanks for having us.
Yes, thank you.
Happy to be here. My name is Sarah. I am a local Venturan. I've lived here most of my life. Left a couple times, but always came back because I loved it.
Yes.
And I got into the financial services industry because I was fortunate enough that as a kid, my parents had a financial advisor who, when I graduated college, I went to him and said, these are my financial goals. And he said, let's make a plan.
Yeah.
And early on, there was a difference between my friends who had the same career as me, what their savings and how much they felt they had control over their finances versus me, that I had a plan and I was working toward it. And that resulted in me buying a house really early on. And I feel like I really, I found a way to help people in a way that this organization, this system has helped me.
Yeah, no, that's great. Definitely see that. And, you know, what you're not sharing, and I'm going to kind of nudge you a little bit, is some of your history, your travels, and your previous career. And I think a lot of that really shapes and molds who you are and also what you're doing today.
Yeah, I'm happy to talk about that. So I used to be a teacher. I taught in Ventura Unified. I taught 9th and 12th grade English, and I ran a program called AVID that helps first-generation college students actually get to college.
Oh, wow.
And I loved it. I absolutely loved it.
Goals have just been driven down on this gal since day one. Yes.
And I learned so many skills being a teacher that when I needed a career change, there were options for me.
Yeah.
And you'd mentioned travel. Yes, I've traveled quite a bit. I studied abroad in Madrid when I was in college. My undergrad's from Chico State. Yes. Same for Cody.
Go Wildcats.
Go Wildcats.
I lived in Madrid, and I have my Spanish citizenship as well.
Oh, my goodness.
And after I graduated college, I was 22. I moved back to Ventura, worked for a winery, did that for a year, and I was like, I am too young to sit behind a desk all day with no windows. I got to get out. And I met someone whose mom lived in Buenos Aires and rented rooms.
Oh, my
gosh.
I
just moved out of my apartment, bought a plane flight, and moved to Argentina, and I ended up teaching English for Heineken.
Wow. Carpe diem to the fullest right there. Seize that day.
I
awesome.
did. Yeah.
Yeah. And, I've when I was younger, I've always been just an adventure. And, you know, as a weekend, I even remember in high school, these were many moons ago, where prior to cell phones, I would just take off for the weekend and leave my parents notes like, hey, I'm going to Santa Cruz for the weekend. like you just couldn't do that stuff today. Like, no. Or, I mean, you could, but probably not pull it off anyways. So, no. I was determined I wanted to see all 50 states before I went out in the country.
That's so cool.
And I didn't get to all 50. And I did that one trip. I just kind of woke up one day and I was like, I need to run with the Bulls. So I called the friend that I knew had a passport and I said, let's go to Pamplona. Yeah. And we did it. And so that trip we hit Spain, and then we went over to Ireland and came back, and I was hooked. Like, once you really see and then feel culture, it's exhilarating, and there's a sense of pride in many of these countries that have the culture. And I mean, I could tell you stories. I mean, I'll share this one real quick, because it really has kind of changed my life and my adventures. Is I'm in Pamplona, Spain. I get off the train. We took a train from Madrid up to Pamplona. As you get closer and closer, you're kind of getting nervous. Like, what's it like? What's it going to be? As you arrive, you get off the train and everybody's wearing these white outfits with red sashes. Whether you're 8 years old or 80 years old, it was just like, whoa, everybody just kind of blends into this little get up, right? So instantly we meet other people, we have friends, and we party and just have a great night. And then the next day we're like, okay, they only do this for 7 days. We've got to get up early. I've spoken to somebody that had done it. We go do the running the bulls. Exciting, right? I mean, you think you're going to get trampled. It's more by people. I mean, depending upon, there's different, let me just say this. It's not feasible to go from the starting point into the arena. So you have to kind of decide, where do you want to be in this push? And so we were after that sharp right 90 turn where a lot of the bulls do slide out and hit people. So we were kind of safer into getting into the arena. Mm-hmm. And so later in the day, we scalped some tickets for the bullfight. And so, like, I was probably in my early 20s, and I was like, I don't know how I feel about a bullfight, right? And so until you see it. So here I am, a foreign country. I'm going to watch a bullfight, and I have a ticket by myself. Now, growing up, I learned Spanish from my stepfather, and I worked in his restaurants, and I spoke Mexican Spanish. Mm-hmm. So I went overconfident to Spain that I'm gonna get by here. And so it's like, instead of a baño, you're asking for an acero. Like, it's just different conjugation completely. So at a certain point, I was like, I'm not even going to try. I'm just going to be that guy that doesn't talk and maybe point at things. Yeah. So here I am in the stadium, and I start to watch this bullfight, and there's two older couples in front of me, 70s, 80s. They're definitely older. And the gentleman in front of me pulls out a bottle of wine and hands me a red Solo cup and pours me wine.
That's incredible.
We have not even exchanged words. He's just sharing his sacrament, as we'll call it. So this continues on, and I'm like, man, this guy's cool. This is nice. And, watching them watch the bullfight, it was like, this was the, soccer championship of, the world here. It was comparable in their eyes. Next thing you know, he pulls out his bocadillo sandwich, right? It's wrapped up in foil, tears off half, hands me half of his sandwich.
Oh my gosh.
And this goes on and throughout the whole kind of adventure. And, in the moment, I didn't think twice of it. And it was the plane ride home that, like, you're looking out the window, just kind of reflecting, and you're jotting all your notes and your goals. And I just reflected back on that. And I go, where could we go to a Dodger game and have some foreigner in front of us or behind us that I would take half my hot dog and hand it to him? Like,
no, never.
Never. But this guy just saw and reached out and just did what he thought was appropriate. And I was blown away. Yeah. And I was also hooked traveling from then on. So.
And I think that's so much of the point of travel.
Yeah.
Yes. In schools, or, we can learn about, well, this is the food you eat in Spain.
Yeah.
Like, we have bocadillos at, soccer matches or bullfighting or whatever.
Yeah.
But it's a different experience to sit there and have someone tear off half of a sandwich and hand it to you.
Yeah.
It's a whole other level of culture.
It was. So you struck my chord of a few of the places that you've been. I have not been to Argentina, but one of my dearest friends here is from Argentina. He keeps threatening me with a good time to take me. So I will be there. One day I'm definitely going. So, sorry to get sidetracked here, but
This isn't a travel podcast.
It could be.
I could talk more about travel than finances, though. So.
Well, and they do go hand in hand because traveling is not inexpensive, we'll say.
True.
And, also as we look at other cultures, and I've been to New Zealand, I've been to Australia, I've been to many other places, but their culture specifically, they want and encourage you to travel now. So they get weeks off of holiday, as they call it, per year. Even starting out with companies, it's weeks off. And they encourage you to go out and sow your oats and see the world. And, I think it makes people a lot more well-rounded, right? And understanding, accepting of differences. And then you get hooked on the amazing food in these places that you go. And I mean, there's so many different reasons, but yeah.
One of the things I learned from that year or that semester I lived in Spain is that the way that other countries do things, other cultures do things, it's not better. It's not worse. It just is.
Yes.
And I mean, are there elements of things that are better? Sure. Are there elements of things that are worse? Yes. But it just is. They're not wrong. They're not right. They're not better. They're not worse. It just is. And I had never had that kind of understanding and ability to not attach an opinion to things.
I'm reflecting on India. I've also been to India, spent 3 weeks there. And to have over 1 billion people in a region is almost unfathomable. And to see the chaos of the roads, but it's like controlled chaos, if that makes any sense. I mean, there is a hierarchy and that falls true to their culture, but it's, you start out walking and then it escalates to bicycles and then tuk-tuks and then rickshaws and then taxi cabs. And then you have regular vehicles, and then you have semis, and that's the hierarchy. And so like, if you're a semi, you're the king of the road and you're on the horn and you're pushing people off, and like, they'll drive in the wrong direction. They'll hit motorcycles. They're not scared to honk the horn, to be aggressive, but somehow it all just works with that many people. And it's chaos. And coming from America, where we have so many controlled traffic lights and stops and speed limits, it's almost lawless, to be honest. Yeah. Crazy.
Never been to India, but it's on my list.
Yes, it's incredible India, as they say. It is definitely incredible. It's overpowering in a lot of ways. So, well, Sarah, thank you so much for kicking us off here. And I've got Cody. Cody, tell me about yourself.
So I am a young 25-year-old financial planner. I'm from Benicia, California, a little small town up in the Bay Area. That's where I grew up. I also went to Chico State.
What?
Yep. And that's where I decided I just wanted to be in business. Okay. It didn't matter what it was. I wanted to make some money.
We like money.
We do like money. Yep. And financial planning kind of caught my eye because not only did I want to make money, but I wanted to help other people make money. I know it's not about just me. It's about the people around me and just kind of having an impact on the community. I love golf as well. Prior to financial planning, I was actually a greenskeeper at a golf course.
Oh my goodness.
While going to school up in Chico.
Mr. Caddyshack over here.
Yeah, I didn't know that.
That's, yep, Mr. Caddyshack over here. The Gophers are by far the worst problem as a greenskeeper. We got beef with the Gophers.
Okay.
It's real. It's real.
The struggle is real.
It is.
Okay.
Yeah, that's kind of my story. I came down here to Ventura September of 2023. My girlfriend actually lives in Camarillo. Okay. And I had some very good college buddies that are here from Ventura. So that's what brings me down here to Ventura. I love it so far. It actually kind of reminds me of Benicia, where I'm from.
Yeah.
A little bit.
Yeah, I can see that.
It's a little warmer here, but
it is, and that's what I love that about Ventura. Even I went home for the holidays, and it was raining the whole time, and I was like, "Why is it raining? Like that doesn't happen in Ventura. Like what the heck? It's supposed to happen tomorrow, though. Sadly,
Let's hope.
Yeah.
We need a little rain. We've had too many fires going. That's for sure.
That is very yes.
Terrible.
So both of you are in the finance industry, and again, maybe you'll kind of chat about the hierarchy and how that's overseen. You're licensed for different tasks and roles that you play, much like mortgages. We have different licenses. Both of you are financial reps, and you help people with different products and kind of set goals. Tell me more. You're a team, which obviously I love. You work together, and Sarah, take it away.
Yeah, sure. So Cody and I are both financial reps. And there are, I mean, it depends on which company you work for, but you can have a lot of different specialties based on what you are, who you want to help. That I'm, engaged, about to get married, and a lot of my friends have kids, and I work with a lot of, young families and newlyweds. So my specialty is more on the family side of it. And there are people who specialize in young professionals like Cody. There's people who specialize in working with small businesses. And over the years, as you build up more expertise, many people eventually become wealth managers and get other certifications as well, depending on their specialty.
Right. And I'm assuming it's much more aligned like mortgages, where even different states, you have to be licensed in different states. Is that correct?
That is true.
Yep. Okay.
Especially like on the insurance side of things. There's out-of-state licenses that we have to get. Usually, because we're here in California, it's one of the hardest states to get your licensing in. So for us, you get your California license. It's typically pretty easy to get those out-of-state licenses. You usually just pay for it, and then that's that.
Gotcha. It's a little different going back to traveling. The reciprocity with visas, many countries don't reciprocate with America because we're such a pain in the ass to come visit. And so when I went to Brazil, I went there with also a friend that was there for a few years. They charge you a couple $100 fees, and it's kind of a pain. I actually had to go to an embassy in San Francisco to go get my visa on short notice. And the fee literally says reciprocity fee. Like they're just charging you because they can, because we charge them. So.
Yeah, when you said that, that was the first country I thought of is Brazil.
Yeah.
Because when I lived in Argentina, I wanted to go to Brazil. I actually went to Iguazu Falls, which is, between Argentina and Brazil.
Yeah.
And I wanted to cross over and go to another country. But the reciprocity fee is ridiculous. And it was like, well, I'm not going to pay a couple $100 to go for an hour and see the falls from the other side.
Yeah.
So, but I do hope to go to Brazil someday.
When they redid the mortgage licenses after the foreclosure crisis in 2010, they came out. Prior to that, we had a Department of Real Estate license, and that's what I had since I started my career. And then they specifically made the mortgage in MLS, and there were many states that didn't even have license requirements. And so the thought was, hey, we need to do a nationwide license. And then if you want to add on different states, there's different endorsements, and you have to take tests and continue in education and stuff. So I am licensed in a few states surrounding here: Washington, Oregon, Arizona, Nevada, and California, of course.
Yeah, and that makes sense with the fluidity of remote work. You don't necessarily need to sit across the table from someone. Cody and I both have clients in lots of other states.
Yeah, and even myself, like I'm in my first year in the business. I'm just crossed 7 months. I've got my Tennessee license. I've got Arizona, Nevada, Washington, and also Texas.
Yeah.
Yeah.
We're going to be posting on our marketing. We go over marketing frequently, and the theme, one of that is, the change in states, whether they're decreasing or increasing in population. California has the largest decrease. And where they're going are the states that I got licensed, my additional licenses, except Texas. That's number 5. And You don't mess with Texas, so I'm not in Texas. So, anyways, kind of diving a little bit deeper into this. I know some of the things, especially as you're kind of starting out, insurances come up, and that's probably some of the starting point, but also I'm going to say also the starting point for valid reasons. I mean, as you start to acquire assets and families and kind of grow in your own natural, you want to protect yourself, but also your heirs. Maybe, Cody, you want to kind of share with just life insurance? Let's start there, starting point here.
Yeah, so life insurance, I think, is a very important piece of a financial plan. It can be, even if you're young, not married, and don't own a home yet, there's a form of life insurance that actually has like cash accumulation tied to it. That's kind of like a form of savings, like a long-term savings. It can be used, 10, 15, 20 years down the road. It can help you if you get sick or anything. You can pull cash out of there. If you want, to buy a home, there's what's called a LELOC, very similar to like a home equity line of credit. There's a life insurance line of credit that you can use in these policies, whether that's like I said, buying a home, or you want to buy a boat or something. Like there's lots of I like boats too. Yeah. There's lots of different ways that life insurance can be used. Typically, the most common form that people, the general public, just think of is term, which sounds just as it sounds. It lasts for a specific time period, whether that be until your specific age, or 20 years, or 30 years, 10 years. And that just gives you the coverage. And if, knock on wood, hopefully you make it past that time period. But if you don't, a death benefit does get paid out to your loved ones tax-free. And that's just that's like the basic coverage. That's what most people think of. But my favorite is that permanent, or the whole life, as some people know it as well. And that just gives you another like savings tool for later on in life.
Yeah. A couple questions coming to mind. Is it true or false that you have to get poked with a needle for life insurance? Do you have to draw blood?
It typically depends on the amount of coverage that you're getting for. There are some policies that you do not need to get poked, draw blood, but for the most part, most of them, you do got to do a very small paramedical exam. It's paid for by the company. It's not something that you got to pay for. It's very simple. You just pee in a cup, draw some blood, answer some questions.
In my 20s, I was nervous. I hesitated on acquiring insurance because of that.
That's funny.
I finally got it, but I was like, I just don't like needles that much. I was like, ugh.
People ask me that all the time.
Yeah.
Am I going to have to? Are they going to draw blood for this policy? And I'm like, yes.
Yep.
And I'm sorry. Go ahead.
And my response is always something like, yes, and it's going to be painful for 30 seconds instead of something happening to you and your family having nothing and it being painful for them for years.
Right.
And they're like, oh.
And Sarah, what's the purpose of them drawing blood and analyzing it, we'll say?
Insurance companies have to weigh their risk as well.
Sure.
And the company we work for is very good about doing a lot of underwriting and due diligence and, taking on clients who are healthy and likely to live longer, which then...
And so what they're looking for is a rating. Is that correct? Like how healthy you are, and if you're maybe a little heavier set like myself, I don't smoke, but let's just pretend I did.
Yeah.
Then I would have a much higher rating, higher risk, and it all correlates.
Yeah, and smoking is, when people are smokers, it changes the rates. The monthly premium, it changes it a lot. The policy's a lot more expensive.
Envision.
Yeah.
The other question that I always laugh at is they always want to know if you've been skydiving lately.
We do have to ask that.
Do you get many skydivers?
I personally have never run into a skydiver yet. So that one hasn't crossed me, no.
I've gotten a few that are, on the application, we go through a whole list of, in the last 5 years, have you?
Yes.
And so I've had a few people who are like, oh yeah, I went skydiving in college. And I'm like, you're 50, you're fine. You don't do it all the time. They don't care. But I've gotten some people with some like peculiar, well, I don't do any of those things, but I do go to Maine every summer and trap lobsters, and I got one of those, and I don't know. I got another. I can't think of it right now, but I got another one that was like a really bizarre specialty.
Yeah, well,
That's dangerous.
I don't know. That one just it strikes me as kind of funny. I mean, I guess it's a valid question, but how many are yeses?
Not that many.
Yeah,
I don't know.
not that many yeses on those questions, and I do believe that you could put like a rider on like policies. So let's say you are a frequent like skydiver, they'll probably just put a rider on your policy saying like if something was to happen to you while skydiving, we can't cover that because like you're just at too much risk.
Yeah, gotcha. Yeah, and I mean those questions I'm sure are readily available. I mean they're not trying to like trick you into anything. They're just trying to analyze your risk. It's been so long since I've answered them, but I think there's like some travel questions, and I don't think that's like, hey, you're going to Canada to see your family. That's a big deal. It's like, hey, are you going to an Eastern tribe in Africa that has a known outbreak? I think that's probably more or less, right?
I think that's more so what it is too. I've had some clients that are like, oh yeah, I went to Mexico last month or whatever, and it's like that is not a problem. Like you were there on vacation, and you just specify, oh, we're there on vacation. But I think, like you said, it's mostly those like if you're going somewhere that has something like potential like malaria and you're going there frequently, I think that's what they're more so like looking for. And
what you're doing there.
Yeah.
Like if you're going to Canada, as you mentioned, but you're like climbing glaciers in December, well, they don't love that.
Yeah. No, I can definitely see that. So with this, and I'm just going to kind of take a second here of, if I were to go back and give myself advice, and anybody that's listening, hopefully you take this with a grain of salt, but do listen, as you're adulting, and increasing in age, you become an adult, you're acquiring a job, you're starting to make money. I really think that everybody should assemble their team. These are the keys to success. And if you look at successful anybody, I can guarantee you they have, on their cell phone, a number to anybody that I'm going to suggest that you have. Number one, a mortgage advisor, right? It's not just buying your first home. I think the keys to wealth and also your first home is not your retirement home, is to develop an ongoing relationship. Even if it's every 10 years that you buy a home, you should have an established relationship with somebody that you can ask questions throughout the years, talk about your plan on, upgrading or buying investments. I work in mortgages, so I want you to have my number, right? And it could be even down to the mail that you receive that you're confused, or your property taxes. I need to be your go-to guy. I think there should also be an estate planner as you're looking, again, starting your family. It's not always for yourself. If I were to pass, God forbid, you know what? Statistically, I'm going to pass, and I'm going to pass prior to my wife. So why would I not have a plan in place? I think death is something that we're all scared to talk about. And I think the sooner that we can have these conversations and prepare for it, not just in our estate plan, but that ties me into a financial plan, right? Of how do we achieve our goals? Most goals are having a family, 2.2 kids, having a house with a little white picket fence, maybe having a rental property to grow our wealth, whatever these goals may be. And it could be even paying off your student loans, whatever that is, having a financial advisor. And I get this kind of coinciding with credit, where so many people that I consult with, they're reluctant to talk to me until they finish a milestone that they feel is critical, yet that could wait 6 months, a year, or it could be even something that is not even relevant, that they're trying to self-guide themselves. And so by establishing, I think, the professionals, hey, I look at credit every single day. I can come up with a credit game plan. I can move a 580 credit score to 680. I can increase that 100 points. If you give me time and money, I can give you the exact plan to do that. The same thing with financial advisors. They're here to advise you if you want to retire at a specific age. My goal is 62. If somebody wants to retire at 70, 65, 50, whatever that number may be, you don't do it out of luck, right? You don't play the lottery enough to say, hey, I'm going to strike it rich one of these days and retire. It's all intentional. And the other few I think that should be on your team is a CPA. Having a CPA, it all ties together with money, right? You own houses, you get more complex. If you're self-employed, which many of us are, you should never be doing your own taxes. You should be consulting with the CPA. They know the tax laws, they know the limits, they know the thresholds, they know the loopholes, right, to help you. And then, God forbid you need it, I think everybody should have an attorney. My wife and I, we have spoken about this. Look, we're law-abiding citizens. God forbid we get into a car accident and somebody gets injured. Who knows what could happen? Don't speak. Call an attorney, right? And that's what they say. And so to me, that is the dream team. And so today I'm bringing you a dream team, part of that, to talk about and also kind of get to know them. So I'm excited kind of what more we can chat about. But again, this is kind of for the financial success all the way around. This is a key component of that.
Yeah, and I love that you call it the dream team. Something that I've always really valued is being part of a community and being part of this community.
Yes.
And that my parents have always had their dream team of this was their financial advisor, and this was their mechanic, and this is their CPA, and this is their, this whole group of people who have kept them safe all these years.
Yes, that's a great way to put it.
In different ways.
Yes.
And I feel like part of what we do working in finances is we keep people safe. And one of the things I value about this career is being on that team.
Yes.
And I love how many of my friends, went off in their 20s and came back and are now taking over their parents' businesses and carrying it out. And my dad actually worked for the same company that I work for now, and had the same role in the 90s.
Oh, wow.
And I love that it's, you see generation after generation taking care of generation after generation.
Yeah.
So that has a lot of value. My role in other people's lives has a lot of value to me as a financial representative.
So as I'm pushing this here and really encouraging people to reach out and, reach out to a financial planner, often that first phone call is the scariest. And, many times when somebody calls and, hey, I'm a first time buyer, I don't know where to start. And I honestly, I thank them. You know what? Thank you for reaching out. You've already done the hardest part. How long have you put off that call, right?
Yeah.
They've thought about it for a long time. They finally got the courage or the gumption or talked to one of their friends or colleagues that was able to provide them with my contact. So, Cody, somebody calls you fresh. What is to be expected of that first phone call?
That first phone call, it's our job to give people just peace of mind when it comes to their finances. So I like to make people just as comfortable as possible and, tell them that, hey, over the phone, like especially this first meeting that I want to set up with you, it's totally just to get to know you better. I want to know your goals. I like to tell people I don't sell products, I sell goal achievement. And nice. so how can I help you do that if I don't know your situation? If I don't know what we're planning for the future, like I don't know where to go from there. So the first meeting is just to get to know you a little bit better, see if you've done any planning in the past, going over things like, do you have a 401k through work? Mm-hmm. Do you have any existing insurance? What are your work benefits like? Is there rooms where we can maybe supplement things like a disability policy and get you that remaining, 50s, 40%, whatever you're missing, like just going through that. And then from there, if it makes sense for my team and myself to put together a plan for someone, then we will put together a plan. We'll schedule another time to meet. We'll show them the plan. And from there, it's totally up to them if they want to go forward or not. There's no obligation. You're not paying us a fee. If you go forward with anything, you pay company then pays me. So there's never like upfront fees or anything like that. So I think our company we work with does a really good job at just giving people that peace of mind and understanding that we can help anybody. We like to meet people where they're at. You don't have to have, millions of dollars to invest with us. Like that's not how we work.
Beautiful. And what I'm hearing is a lot of what we do. Most of this is warm intros. I'm not doing cold calls. It's a referral, friend of a friend, or somebody that's done business with me. I'm assuming a lot of that is the same in your industry.
100%.
Then we do discovery meetings. We're trying to find out what somebody's trying to do. You and I are doing the same thing, right? We're trying to discover what are the goals. And the goals, sometimes they're like, I want to buy a house, and they've just started, working full time, and maybe they don't make enough money today, but there is a path to home ownership. Mm-hmm. And so I think it's encouraging them. And to, my thing is, I say this, hey, I never say no. It just might not be today, Absolutely. And so again, you're not going to retire at 19 years old. So setting realistic goals, I think, is part of the consumer. They need to understand that their first house that they're buying is not going to be their retirement home. It's going to be, I'm pretty sure you're not going to get the pool and the guest suite and things like that. So setting what are the bare minimums that you need to, and that also goes with the finances. And I'm sure, there's a lot of products and things that they can do to grow, but even with my processor, as she started with me fresh out of college. She went to Channel Islands. She was just before graduation, and it was just like the message that I gave to her, as we hired her on, is like, contribute to our 401k, max out what you feel that you can. We do employer matching, and the sooner that you can get started on that, like I tell anybody, hey, 18 years old, go get a job with these plans, because compounding interest, and over time, what doesn't seem like significant now will definitely add up. And I bet you if you polled 90% of people, they would all go back and say, I wish I would have spent more. I wish I would have done more. I wish I would have invested sooner. Right.
Yeah, that's absolutely true. Yeah. I meet with people all the time who, sometimes people in their earlier on in their careers who say I can't afford to do this right now. But then I also meet with people who are in their mid 30s, early 40s, who say, why didn't I start when I was 22? Why didn't I start putting away $20 a month, $30 a month? And I think that with financial advising, people have this idea of before I meet with a financial rep, I need to get to a better place financially.
That's the same in mortgages. So
or sometimes people tell me my finances are a mess. I'll meet with you when I get them organized. And I'm like, no, that's my job. Yeah, exactly. That's why you're going to come see me, is because we're going to look at everything and create a plan based on your goals, like Cody said. Yeah. And I'm going to help you sort that out. Yeah. That's part of what we do. Sometimes people also come to me and say, well, I opened an account. I opened a mutual fund, or I don't know, with this other company. And I say, yeah, but we do more than that. We don't just open an account for you. We help you build a plan. And that's the service that really has value. I know that you can go on, there's a bunch of different apps, and you can just open an account. But that still puts you in a situation where you're, on the field with no coach and no play, and you're just throwing the ball downfield and hoping you hit that goal.
Yeah. Do you find, and sometimes I do, it's, again, we see all walks of life of credit and where people are at in their journey. Maybe people that are apprehensive of reaching out because, I have too much credit card debt, and once I get that under control. Do you see that? You see that a lot?
All the time.
All the time.
It's very rare for someone to not have at least a little bit of credit card debt. And typically those people that are like, oh my gosh, I have so much credit card debt, I promise you it's not that much. We've seen worse. Yeah. We've seen people with a lot of credit card debt. That's like, what happened? Yeah.
And then going back to the idea of having your dream team, we have contacts of other people who work in finance they specialize in helping people, with credit card debt and manage that. So even financial stuff that we might not be experts at, we might have that within our realm.
But I think the message here is they're not alone. And so don't feel embarrassed or shamed, nervous to call. I think it's being honest and being honest with yourself. If you really want to get out of debt, if you really want to not only get out of debt, but save and have a savings account, I think having a plan, you don't do it by accident. You've got to have a plan.
Right.
So I think that's the message that I would like to portray is, buying a house, you've got to start somewhere, right? And so the sooner we can have that initial conversation and get you on that path, the sooner you can get out of debt, sooner you can get into a house, those kinds of things.
Yeah.
Yeah.
Exactly.
Sarah mentioned like not having a coach as well, which I really liked because that's something like I like to view ourselves as that. Like we're like financial coaches. We can help put the plays together and put this plan together for you. But at the end of the day, like it's your life, it's your goals, it's your plan. Like I can't get on the field and execute that for you.
Right.
It's up to you. Which that's again why I like working with the company we work with, because we can work. We meet people where they're at.
Yeah.
And everyone is deserving of a plan.
Oh, of course.
Yeah.
Yeah. Well, and I think with the new administration, and I'm not here to talk politics, but I think there's more of an emphasis on finances and getting things. I mean, if you look at our own government, I mean, we're running in the red for how many years? Our own government misspends, and that's the example that people see. They're only looking at the programs and, the numbers guy that I am, I'm like, everything has a cost. Like, would you run your household like that? Like, you can't spend more than you have. So, we need to get things in line. One of the things, and I know that there's a lot of, and I'll say there was a few executive orders signed on day one, and one of them was regarding housing costs, that's going to go to the top departments, an executive order. And so it's still a little gray on how it's going to play out. But a lot of it is like, hey, we're in a housing crisis of what it costs and the amount of income that it takes to purchase a home. So we need to analyze what are the fees. And, even if we look at like new construction, I think like half of the cost is fees and permits and things like that. And so what we can do to kind of, I think, improve that as a society, I think will really help. I think the other thing, and I wish this was more in the schools, is some type of financial literacy. We, through our nonprofit, we've done some stuff over here where we have done that. And again, the math side of me is teaching these kids, it's cool to sell hats, but if you're doing this as a business, how do you determine the price that you sell the hat, right? And so I kind of teach them a little profit and loss and cost of goods sold and just some really basic info. We even went over just balancing a checkbook, debits and credits, I know we don't have checkbooks anymore, but you guys get the understanding, a little journal of accounting. And getting windy here, but really where I think there should be probably the most emphasis, and this is probably good, well aligned with you guys, is student loans. Many of these kids at 18 years old are getting into student loans before they're really understanding debt. And so like, if you were to ask me, hey, do you want to go to Chico State? Yeah, I want to go to Chico. I want to go join my friends over there, right? So, but there's a cost to that, and you could potentially have to repay those loans for 30 years, 20 years, whatever that number may be. I think there's too many youth that are trying to keep up with the Joneses or live in the moment or not necessarily understand the cost of funds, right? The cost of money versus, hey, what if you could go to your community college? Most of them, I think the first year is free. The second year, you'll pay a few $1,000s. You can have your associate's degree and then transfer on to, a school and walk away with probably less than half of the debts. Like, there's a lot of different plans, and I wish there was some type of like counseling required prior to student loans. And I know you guys, also probably work with clients that have student loans, right?
I do, yeah. And when I was a teacher, I taught a 12th grade program that helped kids through the application process.
Okay.
And I so frequently would find students who had, they got enough scholarships and loans and, grants for 90% of their tuition. And then they chose to take out $20,000 so they could live in a dorm suite. And I was like, no, live in the triple and it's going to be awful and you're going to love it.
You're going to hate it, but you're going to love it.
Yeah, you're going to hate it, but you're going to love it. And that is like the magic of freshman year.
Yeah.
And universities have a lot of like gimmicks.
Yeah.
I know more recently there was a university that built a wave pool.
Oh.
Or a lazy river. That's what they're called. A lazy river. And it's like, yeah, but it costs
Cody and I are in.
Yeah, I know.
I'm so in.
These two are thinking about going to grad school there now.
I'm like, where's this school at?
But students don't realize
Do they have a golf course?
I'm sure they do.
I'm there. Sign
that
me
you
up.
have to pay for that. And that, I mean, going to community college is always an option, but also looking at, well, what are you really paying for here at this university?
You know, mortgages, there's a specific loan product, reverse mortgages, and it's catered towards seniors. And, you know, in mortgages, I mean, heavy emphasis is, you know, no discrimination. And so literally you could be 100 years old and apply for a loan, and we can't look at your loan like, well, you're only going to live for a few years. No, you can get our maximum loan. If it's 30 years, that's what you can get. And there's also an older stigma with reverse mortgages that there were a lot of bad lenders that preyed on the elderly, and rightfully so. They've come out with compliance and requirements. But again, where I'm going with that is prior to even applying for a reverse mortgage, you are required to take a third-party counseling session. So there's a class with they encourage in person, but they'll also do over the phone counseling sessions. So you have to speak with somebody to like, hey, did you understand? Did you retain? Do you have any questions? And then there's a 7-day cooling off period, right? Like they want to make sure before you apply, you readily know what you're getting yourself into. And I think that's like really good. Why are we not doing that again for student loans? Like,
yeah.
I don't know.
And I mean, I think about that in terms of, you mentioned it, that it tends to be older people. And we work a lot. We see a lot of the benefits of generational wealth.
Yes.
And how much that sets young people up for financial success and for so many different options. And I
Yes.
see how if an older couple had a home that then they're taken advantage of, they don't get to keep the home, then the kids don't have the home to live in while they're paying off their student loans in their 20s. And then, you know, the generational wealth that it could be lost.
Yeah.
There's two different types of reverse mortgages, correct?
As far as like
aren't they age-based?
they all are. So most of them are 62 and older.
Okay.
And if you're married, it goes based upon the youngest borrower. So, and then there are some like alternative FHA and HUD. HUD is the Department of Housing and Urban Development, the government that oversees FHA. They also oversee a majority of the reverse mortgages, and they've tried to clean it up and really regulate a lot more. Their reverse mortgage is 62. But again, there's some programs outside of that that will go 55 and older. Okay. Now, just real quick, I mean, and you asked, are there multiple programs? Most people just think of the little old lady that has a house that's paid for and she owes nothing on it, right? And so she can turn that into revenue each month. So instead of paying a forward mortgage, she writes a check for $1,500 a month. She would actually receive $1,500 a month. So she's using the equity in her home to improve the quality of her life. That's what a majority of people understand the program to be. There's actually a couple other options, and you can have a combination of these. You could do a lump sum. So maybe you want to buy a new vehicle, set yourself up. This is my last car. I want to buy a brand new. I need $50,000. I want to do a few things to the house. So $25,000. So I need $75,000 in a lump sum. They'll pay you that up front, but then instead of getting $1,500 a month, maybe you get $800 a month. Okay. Then there's another option, which is a line of credit.
Okay.
We know those are HELOCs. Yep. You have LELOCs, all the acronyms of that. Home equity line of credit. HELOC is the acronym where if you have a $100,000 line of credit, you can draw on it, and actually, with the way that product works, is the line limit increases about 8% per year. So it over time, even if you max it out with the values of the home increasing, it will increase over time. And then one of the total outside solutions that people don't even understand is that you can also do a reverse mortgage purchase. And so the idea here is, let's just grab $1 million home, which is the median price here. You can buy a $1 million home, and let's say instead of paying cash for it, you put down 60%. Okay, so 600,000, and you would do a reverse mortgage for 400,000. It's not enough equity to receive a payment, but you actually have no payment. So let's say that you're managing their wealth at $1 million, and they say, hey, instead of drawing the full million, you could keep 400,000 of my money continuing to grow into other investments, but then I'm only going to take whatever's bare necessity minimum to put down to break even, whatever the break even point is. Now, what that break even point is depends a lot with current interest rates, also the age. Again, the higher the age, the more that they're willing to lend, right? If you're 93 years old, it's a lot more, your life expectancy is lower than if you're 73. So
that's pretty cool.
Yeah. So again, I like to, kind of share these ideas with the financial side, just because, again, where you might not be aware of some of those features, it could help make recommendations as far as investing and also retain some of their funds for future investing. So
100%, that's very helpful.
Yeah.
Yeah. And Cody, you know quite a bit about the mortgage industry, don't you?
Just a little bit, not a lot.
Okay.
Very fortunate. I grew up in a mortgage family. My dad is a mortgage advisor up in Santa Rosa in Northern California.
Okay.
Yeah. So that's why I was just asking. I was like, oh, that's really cool.
Yeah. And we call them reverse mortgages, but the true name is HECM, HECM, Home Equity Conversion Mortgage.
HECM.
Yeah,
Okay.
it's I don't know where they come up with that, but that's the true name of a reverse.
And these reverse mortgages are becoming more popular.
They are.
Right? Yeah.
Yes. Yeah. So much so that we have an entire reverse mortgage division within our company, and they've come out and done lunch and learns here in my office, and we did a podcast about them. So yeah, refer back to that podcast.
Cool. We will.
We will.
Yeah.
100%.
So any other, finance, I mean, we can get deep. We can kind of, what would you like to share with the listeners as far as, some of the products and things that you offer?
So I know we covered life insurance a little bit. Another thing that's very popular in our company, just to make sure that we want to protect, especially for young professionals. We have time on our side as far as, and our number one ability to make income is our ability to work. Like, that's our number one asset. Like, even if you have a minimum wage job, you're 18 years old, if you're going to work for the next 30, 40 years, you will make millions of dollars. Mm-hmm. And so something that we have, I don't want to say a product, a policy that we have with the company we work with is what's called a long-term disability insurance product. And with this long-term disability, if you get sick, injured, or hurt, and you can't work for longer than 90 days, you get a tax-free payment from company we work with.
Oh, wow.
So that is a way, and you can build these policies to last up until your age 80, or 70, sorry. So if you can't work until you're age 70, you'll get paid every single month, tax-free benefit from company. And that's just a way. I view that as like the ultimate vehicle of your financial plan. That's what's driving the plan, is your ability to work.
Yeah.
And so let's say I got sick, injured, or hurt yesterday, and I can't work anymore. I can continue to pay my bills. I can continue to invest and be aggressive on the offensive side because I had this defensive, policy put in place just to protect my income. And to me, I also like thinking, like I said earlier, I don't sell products, I sell goal achievement. I think it's very important to just think on the defensive side, because yes, the financial plan is built to help you build the future that you want, but it's also to protect the future you don't want.
Mm-hmm. You know, insurance is one of those, I learned the hard way, and I'm fortunate enough that it didn't turn out like catastrophic, but I got into an accident when I was 18 or 19. And at that time, you know, you're just trying to be frugal and cost effective. And it was a multiple car accident. That was my fault. And somebody got hurt and went to the hospital, and I was petrified, and I did get sued. And thankfully it was like, I had just enough insurance that it didn't like devastate me. But after that, I was like, I need to rethink this. And I've just learned that insurance is not a mandatory. It's more of like, I need and want to have this. It's there for when you need it, right? But it's like, it's better to have more insurance than not enough, right? And so
100%.
as you can continue to grow in your goals and wealth, again, finding additional products, like nobody foresees themselves getting hurt and can't go back to work, but maybe it's that car accident. Maybe it could have been my car accident that I did that to somebody. And now, you know, their lifestyle, their quality of life isn't devastated as much as it could have been. So,
Yeah, and I think one of the misconceptions with disability income insurance is people say, oh, I get through that through work. Typically, you get 60% of your current salary per month. And it is usually your employer gets a tax break on it, so you have to pay taxes on it. So by the time you get it, it's usually 40%.
yeah.
And that's usually only for 3 months, maybe 6 months. And then sometimes people think, well, I'll just go on state disability, but it's not that simple that you can't work this month and you like call Sacramento and you're like, hey, can I have my paycheck?
Yeah.
It's pretty complex. And what we tend to do is help insure that extra 40%, which you use your after-tax dollars to pay the premiums. Therefore, it comes to you tax-free. And that can help ensure that you have the money you need if you're sick or injured.
Skydivers allowed? Just curious. I'm asking for a friend.
Skydivers, that's on the application.
Okay.
So it might come with a rider,
Okay.
which is
gotcha. Just a heads up out there. Okay. One of the other things that I've also heard about, and Sarah, I'd love for you to kind of elaborate here, is long-term care insurance.
Yeah, I'm happy to talk about long-term care insurance. So long-term care insurance is essentially, you get to a place in your life where you can't take care of your basic needs, and you need maybe part-time help at home. Maybe you need to live in a skilled nursing center. And that is very expensive, a lot more expensive than people think. And it's pretty common that people at some point in their lives end up needing help like that. So long-term care insurance is insurance that helps pay for those costs beforehand. It has been discussed to make it a law that everyone either has to have long-term care insurance or pay into the state long-term care system, because there are so many people who have not saved for that expense and are either ending up homeless or ending up relying on the state.
And just kind of curious, when you're rated premiums or you go over the coverages, is it a dollar amount or is it more or less like facilities? For example, like $10,000 a month. Is that what, like I would come to you and say, hey, I want this facility. I like this one in particular. It's $10,000 a month. Or are there different levels of facilities? Maybe there's not. And you guys choose the facility.
So we don't choose the facility. It's a dollar amount.
It's a dollar amount. Okay.
Yeah. So you can have, usually the way the policy is explained is you have X number of years of coverage for X number of dollars a month. And say it's, just to make the math easy, say you have $10,000 a month of coverage for, 3 years. But if you only use $5,000 a month, then you have it for 6 years. And you can go, say you have an accident and you go on claim and you are in a skilled nursing home for 6 months and you have a total of 3 years experience or 3 years insurance, then you move home. And then if you need it again in the future, then the other 2.5 years are there. You pay into it. And there are a lot of different ways to set up the policies, but it is, at least what our company does, I can't speak of other companies, but it is a dollar amount.
Gotcha. Have you guys seen the miniseries out on the inside right now?
I have not.
I have not.
Ted Danson, is that his name, from Cheers?
Yeah.
Yeah. He is recruited. There's a jewel theft in a retirement home. And so he's recruited. He just lost his wife to go on the inside of this retirement home in San Francisco. And it is quite the show, and there's quite some characters. And it also gives you a glimpse on the inside because, right, there's self-functioning people that are on, I'm going to call it more of the leisure retirement side, but then there's also the full care facility. And even within the show, it's like behind the doors, you know, like we don't want to talk about it, but it is, again, many of us are going to get to that point that we need that assistance to bathe and to take medicines and to, you know, just the basic facilities that, you know, we need to have. So it's kind of scary to think about, like, I'm within reach of retirement, but then that's also within reach of being acknowledging you're old. And so,
you know,
the self-awareness here.
I really am one of those people who believes that, like, age is a number that does have some value, but working in this field, I meet with people who are, you know, 20 years old and have worked a ton and saved a ton of money. And they're like, well, you know, I got to get my retirement stuff in place because I'm retiring in 40 years. And then I meet with other people who are in their 50s and, like, yes, they've saved for retirement, but they're, like, young and they're like, oh, I've got a ton of time left.
Yeah.
And I feel like that's so much of, like, how you view yourself.
Oh, of course. It totally is.
I didn't think you were old when we met, but after that comment, maybe
Yeah, I don't know. It's just...
You're not old.
Different decades throughout your life, you know, the 20s, you're invincible. The 30s, you don't feel much different than the 20s. The 40s, you're starting to feel the repercussions of the 30s. And I'm not to my 50s yet, so I don't even know what's to prepare there. But I'm a little nervous. But hey, it is what it is.
Well,
it's
consider
life.
the alternative.
And I have lived, and I still continue to live my life to the fullest. And so that's something to be said, and I'm proud of that, and I'm happy, and it's all that we can ask for. Yeah. I have a little game here that we're going to play. I reached out to my brother-in-law who is adulting. He's just bought his first house. He's still pretty young, but again, like, he'd maybe be that ideal, you know, person to get into finance without knowing the industry or knowing products. And so I got a few questions from him. And Cody, why don't you pick between number 1 and 5, and you're going to get a question.
Let's do 4.
Number 4, what is compound interest?
Compound interest is, let's say you have some dollars in the market, and as time goes on, those dollars are going to continue to go up. And as you keep feeding into this account, it's going to continue to grow. And so whenever you have any type of account that grows money over time, that's what compounding your interest is. You're building interest within this account.
Exponentially.
Yeah,
very much like home appreciation. If it's 5% year over year, year 1, your home is worth $100,000. Year 2, it's worth $105,000. Then you add 5% onto 105. It's building upon the building. So
yes,
nailed it. All right, Sarah, between 1 and 5.
1.
1. What is a realistic age to retire?
Oh my gosh, that's a big question. There's a lot of factors that go into it.
I know there is, yeah.
I mean, most of the time, your early 60s is what we say. That has a lot to do with what are your expenses? Mm-hmm. Do you have kids? How much do you make? How much are you saving? I have a couple of friends who live in Seattle who are a young couple. They work like crazy. They make a ton of money. And their plan is to retire. They're my age. They're, late 30s. Their plan is to retire at 50 and then take a full year off and then get jobs that are either part-time or very low stress. So they're going to do this kind of semi-retirement thing.
Got it.
But when people ask, when can I retire? A lot of times the questions I ask them are like, well, how old's your youngest child? And how long do you expect to support them? And if they say, well, I want them to go to college, I'm like, okay, well, the earliest you can retire is probably when they turn 22 or 23. But if you don't have kids, if you have the child.
No, that's good. And there's not a cut and dry answer. I know many seniors are working later and later and they have to. So again, the preparation, when you have a plan, you can retire at 50.
It also depends on where you want to retire. If there's plenty of people who live in Ventura who are retirement age now who paid $150,000 for their house that's now worth $1 million. Well, if you want to sell it and take all that cash and move to Idaho, you can buy the same house for the price you paid for it here.
Yeah, you can get a ranch.
You can get a whole ranch. And then that changes your retirement options as well.
Yep. Okay, Cody, 2, 3, or 5?
Let's go 3.
3. What is a good ROI, return on investment?
What is a good ROI? I would say realistically anything over, if you're getting an ROI, it's a good ROI.
Yeah.
Like you're making money. There's different ways. Some people like in the markets look for like a 12% return that's like really good. But there's different buckets that you would want to put money into for different reasonings, different goals. And that is kind of having like just a diverse portfolio that have different ROIs for each bucket. So let's say like life insurance, for example, specifically like a permanent life insurance policy. Our company like this year is paying out a 5.5% dividend rate, which is pretty good for an insurance product. Mm-hmm. And then, there's accounts like, let's say you wanted to be in a mutual fund. There's mutual funds that can do 18, 19% a year, but also with being in the markets, there's also risk that comes to that. It could also be negative 19%. Right. So me personally, I prefer safe dollars, something that I know will give me a return. And a lot of that has to do with credit ratings, which our company that we work with is AAA rated. It's even rated higher than the U.S. government. I know you brought up the U.S. government.
They got downgraded.
In the red. They did get downgraded. So it really just depends on, like that's kind of it depends on what your goals are,
that's what I was going to say.
What bucket you really want to put your money into.
And probably your age, right? The sooner
Absolutely.
you start out, you're okay with a little higher volatility,
right,
which would bring a higher rate of return. But as you get winding down in your retirement, you want to be as conservative probably as possible to just keep them growing. Great answer.
Cool.
Sarah, 2 or 5?
2.
2. How much do I need to retire? You're getting all these retirement
questions. I like the retirement questions. I like the retirement questions because people feel so out of control when it comes to retirement, and that it's not as big of a planning process, not as overwhelming of a planning process if they just sit down and talk about it. Mm-hmm. How much is the question? How much money do I need to retire?
Yeah.
So we're going to look at, I had already mentioned your kids. When are your kids out of the house? That's an aspect. When is your house paid off? Where do you want to retire? What is your spending today? And will it be the same in retirement? People tend to think that in retirement, like, oh, I'll be old, I won't go anywhere or do anything. But that's not what happens at all. When you're retired, it's like every day's Saturday.
Yeah.
You want to go out to dinner, you want to travel, you want to buy things, you want to. So people actually spend more in retirement than they do when they're working. And they think, well, I'll pay less in gas because I won't have a commute. Like, that might be true. And like, oh, I won't need work clothes. Yeah, but you're going to need all these clothes for the cruises you go on. And people also have a lot of questions about what am I getting from Social Security? And it's really not that difficult to figure it out. You go on the Social Security website and create an account and look at how many years you've paid in and look at your estimated benefit.
I receive quarterly. I've signed up. I get quarterly, like actual printed newsletter with my finances. And it shows all the years I've paid in and what to expect and blah, blah, blah. So, yeah, you should do that, definitely.
Yeah.
All right, Cody, last one, and it's a good one. What are your thoughts on crypto?
Ooh, okay. Crypto, I can't talk about, actually.
Okay.
Yeah, unfortunately, no.
that, and I totally get it with the finance stuff, but doesn't mean I can't chat about it. And I don't know enough to chat about it, but all I'm going to say is crypto is getting more and more popular, and I'm seeing it more. It seems like, every time Elon Musk is tweeting something, there's certain cryptos that are just going up. I just watched actually this week. I follow MBS Highway religiously every day. That's where we get our mortgage news and updates and outlooks. And Dan Habib, he did a whole special on just crypto. And I took the class. It was a 1-hour class just because I was more curious about it. But I think for my own personal thresholds, it's nothing that I'm really interested at all in investing in. And, the volatility, yes, you can see that it, sharply goes up and it's at crazy levels, but that means it can also sharply go down. And I think I'm just not willing to take that risk, but I'm hearing the chatter that the younger and younger generations are. And so again, it's something I probably need to continue to listen and learn about. But for myself, I'm just not ready to invest. So there, I answered it for you.
We can talk about it off air.
Yeah, we're not allowed to talk about it. So.
Okay. All right. Well, we're over an hour here. So without further ado, do we have any last minute thoughts from Cody, from Sarah that you would like to kind of touch base on before we get going?
My last minute thought is if you're considering financial planning, just give it a try. Sit down. Don't wait until your finances are organized. Go find someone who's going to help you. Go find a person who's going to help you. That is what we do. We help people meet their goals.
Beautiful.
Yep.
Love it.
Just to piggyback on what Sarah said, that is our job, is to help you organize and put the plan together. So if, like she said, if you're even thinking about it, give it a try. Don't wait until, I have to have this magic number in my savings. It's embarrassing. No, come talk to us.
Yeah. No, that's great. All right. Well, thank you both for being here. I'm sure we've given some insight. Many of you know about life insurance, but I'm sure there's probably several that do not know and learned at least one, if not 2, 3, 10 different things that we chatted about today. Make sure that you subscribe and stay in tuned. I have many new episodes, if I can even say it, coming out. We just did our planning as 2025 is here kicked off, and goals and who we'd like to have on the podcast. Of course, if you have any topics or people that you would like to have on the podcast, please make those recommendations. I'm going to throw it out there. I think when you say it, you have to commit to it. And for the month of February, every business day, I've committed to making a video on our social media. I always talk about it. I always say I'm going to do it, and somehow it doesn't come through. So it is going to be true because I'm telling all you listeners. So double check our social media. The month of February, whatever I'm mumbling about. There's so much news and topics, mortgages related. I can even go off now, but I won't. That I think even if it's just a minute or 90 seconds that I can keep everybody apprised of what's going on in the industry, it helps us all. So thank you so much for tuning in. We love you all. Peace.
That was so good.
I needed to cough.
Oh, that was so good. I was so relaxed.
That was fun.
I didn't even say that we had done this before.